So tell me, which stocks are on your watch list right now?
Well, I got a couple of consumer names, Conway, that I really like. And one of my favorites has always been, since they went public about 10, 12 years ago, is in Hyatt Hotels. And Hyatt Hotels is one of the more premier brands of hotels. You've got names like Hilton and Marriott, of course, but and then you've got Hyatt and then Intercontinental. But I like the Hyatt brand only because they cater very well to the high net worth individuals overseas, in Europe and in Asia. And then on the other side, I like Chewy, which a lot of people maybe don't recognize, but Chewy, not the restaurant, but the pet store name, which was spun off some years ago. Chewy has been growing like crazy. They're doing all sorts of things in terms of medical and for pets. And their digital business has been off the charts. And the last quarter, they surprised to the upside and even announced a big share buyback. So the stock has been doing very, very well. It's been kind of flatlining between the $35 and $40 level. I think over the next 15, 16 months, Conway, this stock's got some room to get about $50, $55, if not more. So and they're always on the radar screen for a buyout as well too. So I'm not saying that's going to happen, but they're always being talked about as being potentially suited.
And you have a housewares company on your list too, right?
I like Williams-Sonoma, which is another consumer name. I like Williams-Sonoma as a big, strong consumer brand. They're going to be reporting their earnings for the fourth quarter, which includes the holiday period, November, December, and January, in about a couple of weeks. And the last quarter was just lights out. It was a blowout quarter with huge margins gains and huge share gains, big revenue. And I think that this last quarter, being the holidays, was probably a good, strong quarter for Williams-Sonoma. And I think they're trading near all-time highs right now. And I think that this stock's got some room to get to about $300. I think it's about $210, $215 right now. Maybe about $300 by the end of the year, which would be a huge gainer for them. But I think that as long as the margins are really strong and their market share is increasing, they can come back with a nice big buyback. They did that last quarter as well too. All systems go for Williams-Sonoma.
So I'm scratching my head a little bit based on some of the things you talked about earlier. If interest rates are higher for longer,
right,
if commodity prices are headed higher, and on top of that we got the threat of tariffs, why would you like consumer-facing brands, especially somebody like Williams-Sonoma, which is getting stuff imported? Mm-hmm. And you also mentioned, well, Hyatt is travel, but let's talk about why are you so bullish on consumers given the macro? Well,
I think at least for 2025, Conway, the job market is still robust. I mean, people are working, and the unemployment rate dropped from 4.1 to 4%. So it's a very, very tight job market. When a tight job market means that labor costs are high and they're increasing, and we saw that also with labor costs. So when people are working, Conway, they have money and they're going to spend. Right, so this is what it's all about. It's about spending money. And look, the economy is 70% of the responsible from the consumer, and I think that this is where you want to. This is where you really want to be. So.